Internal Revenue Service IRS tax news. Claiming the employee retention credit in the first and second calendar quarter 2021. COVID tax tip 2021-49, April 13, 2021. IRS issues guidance for employers claiming the employee retention credit under the Corona Aid, Relief, and Economic Security Act, modified by the Taxpayer Certainty and Disaster Tax Relief Act of 2020. Notice 2021-23, there's a link to that here, explains the changes for the first and second calendar quarters of 2021, including the increase in the maximum credit amount, the expansion of the category of employers that may be eligible to claim the credit, modifications to the gross receipts tests, revisions to the definition of qualified wages, new restrictions on the ability of eligible employers to request an advance payment of the credit. Eligible employers can now claim a refundable tax credit against the employer's share of Social Security tax equal to 70% of the qualified wages they pay to employees after December 31st, 2020 through June 30th, 2021. So first two quarters, 2021 in essence. Qualified wages are limited to $10,000 per employee per calendar quarter in 2021. The maximum employee retention credit available is $7,000 per employee per calendar quarter for a total of $14,000 for the first two calendar quarters of 2021. So employers can get the employee retention credit for the first two calendar quarters of 2021 before filing their employee tax returns by reducing the employment tax deposits. So here's my interpretation of the general idea here. The payroll taxes, the way the payroll taxes are working is, of course, generally that you have the employees and when they have the wages, you give them the wages, but the government makes you take from them withholdings. The withholdings are going to be the federal income tax that they owe and the Social Security tax that they owe and the Medicare that they owe. And then the employer also has to pay, based on the employee wages, the employer taxes, including the employer portion of Social Security, the employer portion of then Medicare. So normally then, this is fairly straightforward, unlike the income tax, because the income tax has a progressive tax system, and these taxes, the payroll taxes, are typically going to be not progressive. The Social Security and Medicare are kind of more like a flat tax, although there's alterations to it and whatnot. And then the amount that's withheld for federal income taxes is fairly straightforward because that's determined through a set kind of calculation. And therefore, you have to file the tax returns quarterly normally, which is the 941 for the payroll tax forms. And when you file the 941, it's usually just an informational return, meaning you usually, hopefully, are telling the IRS, hey, look, this is what we owed. I'm just recalculating it for the quarter. Here's what we paid, which is the same amount. There's not usually a difference as there is with the income tax, like the 1040, because the 1040 is so complex, right? These two should kind of match up, and then you don't owe any money, hopefully, when you file the quarterly taxes for payroll because you already paid them. That's kind of the idea. Now, of course, they want to give this credit, which would be on the 941s, basically at the end of the quarter, so they can get money back into people's hands and whatnot. But They don't want people to have to wait to file the 941 in order to be available for the credit, and then the IRS send out the credit. Instead, they'd like to get the money out sooner. How can they get the money out sooner? They can tell you that the credit's going to be there, and basically these withholdings that you're taking, or the amount of deposits that you would have been making, you want to hold on to that. You're going to calculate the credit, and then you keep the money instead of giving it to the IRS and then filing the informational return at the end. And then everything should reconcile at the end of the quarter, taking into consideration what you would have owed and then the credit. So that's kind of the idea that we have here. Similar kind of concept we've seen in other kind of areas with these IRS changes is that they basically, are making the change that will then reconcile itself out on the tax return, in this case, the 941. And you basically have the kind of prepayment, which isn't really a payment. You're just holding on to the money that you would have deposited that should then reconcile when you file the tax return, which in this case is normally quarterly, with the 941. Okay, so that's my just general interpretation. Disclaimer, do your own research here on that. But that's my brief overview. Small employers may request advance payments of the credit on Form 7200, Advance of Employer Credits Due to COVID. There's a link to that here after reducing deposits. So this would be a situation where you're going, okay, now I've reduced the deposits, but I'm still owed money based on the level of the credit. Do I have to then wait until I file the tax return, the 941, in order to get the extra money that's over and above basically the deposit amount? And they're saying, no, you can actually get that advance possibly with the form 7200. So if you're qualified type of business that's allowed to do that. So then what you want to do is figure the credit. Does the credit, is the amount of deposits enough to cover that? If not, then do you want to file the form 7200 to get the advance payments before filing the 941 in that situation? So that's my general interpretation there. So some limits and eligible requirements apply. In 2021, advances are not available for large employers. Instructions on how to calculate and claim the employee retention credit for the first 2 calendar quarters in 2021 are available in Notice 2021-23. Under the American Rescue Plan Act of 2021, the employee retention credit is available to eligible employers for wages paid during the 3rd and 4th quarter of 2021. The Department of the Treasury and the IRS will provide further guidance in this later. So once again, let's read that one more time. Under the American Rescue Plan Act of 2021, the employer retention credit is available to eligible employers for wages paid during the 3rd and 4th quarters of 2021. The Department of the Treasury and the IRS will provide further guidance on that later. So it looks like they're going 3rd and 4th quarter, possibly here too. They'll give us more information on that, and we'll be happy to go through that once it happens. It's going to be great. So more coronavirus relief information for businesses is available on irs.gov. There's a link to that here. There'll be a link to this in the description.